Hey everybody, this is Jim at FreeChartVideos.com, where I try to use time-honored techniques to make sense out of modern markets. This video is for educational purposes only and is not intended to be any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I'm not a licensed professional, just a guy that draws lines on charts. So let's look at the S&P. Okay, we're going to do this a little different today. This is going to be kind of a broad recap of everything that that I've talked about over the past few months. But I'm going to try to do it real quickly. The first thing I want to point out is that this was the top of the bull market right here, this top right here in October of 2008. And when the panic selling finally subsided, the S&P had made a well-defined inverse head and shoulders pattern that started actually in October of 2009 and didn't break out until October of 2008. All right, start all over again. The top was in October of 2007. My mistake. So, October 2007, top. The head and shoulders pattern started October 2009. All right, there we go. So, there's the left shoulder, head, right shoulder, breakout in July of 2009. With that breakout, we could measure the height or the depth of the head from the neckline. And the neckline is just the line that's drawn over the peaks that define the shoulders from the head. So this was pretty nice. It was, had this little panic right here, which is kind of typical of a bear market bottom. And then it broke out, moved up nicely. You can see we had a pretty serious correction in the late spring and summer of 2010, and then the markets broke out and started heading back up. Let's go to a 4-hour view. You can see that this was the flash crash, and a lot of people said that this looks like this is going to be the big leg down to about S&P 400, but the moment this move right here got above this blue line, I think smart chartists started saying, hold on, this is looking like a bull flag. And it broke out, and true to form, came back and back tested this line perfectly. Look at that right there. And then it started heading back up. By the time it headed back up, this had formed another inverse head and shoulders. The projected target from the large head and shoulders that is off to the left of the chart was 1340 to 1350, which is this little green box right here. You can see that, light green. The target from this head and shoulders was 1240 to 1250. So I think there's been some confusion when I've been talking about these inverse head and shoulders. There's actually two of them that have been working here. Now, let's move in to a 2-hour chart. You can see that once we got out of that bottom of the and broke out from that head and shoulders, for 9 weeks we were in a trend channel defined by this green line on top and this blue line on bottom. After about 9 weeks of nice action in between that line, this trend broke. But instead of breaking down for a reversal, it simply broke down for a consolidation. So we consolidated, and then we started moving back up. At the time, if those of you who were listening to my videos back in November, you'll remember that I said I don't think we're going to really get over this blue line again. I think this blue line from now on will be resistance. And even though it kind of maybe touched over it just a little bit in December, really you can see that this line has been serving as resistance. Additionally, there is now a bottom channel line that I've drawn from this bottom which was the bottom of the right shoulder of the last inverse head and shoulders, the bottom after the consolidation, and that also lines up with the bottom that was made during the Egyptian mess. So let's move in a little closer now. Let's look at a 30-minute chart. Come to daddy. All right, now there've been some kind of squiggly looking movement here. It has not been real well organized to my eye. So this tells me with this kind of whipsawing around, we may be getting ready to find a temporary top. It is my hope that we find that top in this green target area. You know, there's no guarantees. We're so close. What, 1332 yesterday, and that's 8 points away from me being able to say I made that call more than a year and a half ago, but it hadn't made it yet. So I'm hoping it does. If it doesn't, ain't no big deal, because that call and that bullish outlook that inverse head and shoulders made back in 2009 has kept me in the markets. So anyway, that's a good thing. Now, there was some apparent channel action that looked like it was kind of between this gray line and this gray line. Then Egypt happened, and then it looks like we started heading up in a slightly accelerated channel defined by these red lines. Now, we also would set up an area of resistance and then break out. Area of resistance, break out. I'm going to look at now at a 10-minute chart, and I want to show you what's going on as of the end of the day today. And there's some things that, it's kind of a blessing and a curse. There are things I like, there are things I don't like. One thing I like is that this line that had been resistance, I moved this just a hair to these peaks because it lined up really nicely with these. But anyway, this line that has been, it's kind of moved around here a little bit. Basically, that has been serving as support. Twice today it was tested, twice it held. This bottom red channel line has also been tested strongly today. It held. Now, what are we looking for? Well, first thing is I have drawn this little line right here, and I am looking for, and I think this is probably being kind of stupid to say this, because obviously that line has got to break if the markets are going to continue up. So it is my hope that this red line and this purple line right here will hold, that tomorrow the markets will open up over this orange line and then head up, and in a day, maybe a few days, find their way into this green area. That's what I want to have happen. I have no guarantees that it will happen, but let me tell you a couple things. The first thing is I want you to see the support that we have under the markets right now. We've got support. I need to move this line up a little bit. We've got this support right here in this big channel that I pointed out before. We've got support, horizontal support from this pattern back in early February. We've got horizontal support from this last pattern in mid-February that was tested today. We have rising support that was tested today. Where do we have resistance? We've got resistance above this green area. So, if these support and resistance lines do what they're supposed to do, and we can get over this orange line, then we should head up into this green area. Now, again, I just want to remind you, there's no guarantees. We could head down here, camp out for a while, then head back up. Or this may be, this may be the high right here at 1332, and my call missed by 8. That's possible. As a matter of fact, that's more than possible. That's quite possible. But anyway, that's what's going on with the S&P. I just wanted to share this with you. This is a time when you've really got to be, I think, on your toes, watching this really carefully, because at some point, all of this nice run is going to encounter something that's gonna take the markets down. And I think eventually we're probably going to have to go test the low 1200s. But when I can't tell you when. I just know we have to watch it now. And the idea of technical analysis is not always to turn it into a crystal ball and to say to people, I know what the markets are going to do a year from now. Now, sometimes they set up in such a way to where you actually can do that with a pretty good degree of certainty, which is what I did back in late July of 2009, the 1340 to 1350. I from that pattern, it's about an 80% or so completion rate that's going to happen. So I was confident with that. But we have run out of that kind of a setup for right now. We don't have that kind of a tailwind behind us. We're reaching the point to where we have to start looking for new things to develop. Nothing right now looks that toppy. I can tell you I'm slightly concerned that after tagging this red channel, we have now had 3 attacks on that bottom line. That doesn't give me a real good feeling, because if it keeps getting attacked repeatedly, eventually this will fail. But that's why I mention additional support underneath us. So let's just keep our fingers crossed and see what gives. Appreciate you watching the video and listening to me. And when you get a chance, please stop by freechartvideos.com. And I'm trying to keep this free. The only way I can do it is if there's enough traffic to kind of keep things going organically, as some might say. In other words, I need traffic so that the businesses that advertise on the site see the value in doing so. The other thing is, if you've gotten something out of this and you like the fact that it's free and you don't pay for this service, I'm open to donations. I just call it like it is. I'm not gonna. I don't feel right charging for this because I'm not a licensed professional. I'm just a guy that draws lines on charts. But if this has done you some good and you want to help keep the videos coming, hey, donate something. I'll take it. I'm not proud. Take care. We'll have another video probably late tomorrow. I'm traveling again, so we'll see. We'll see what I'll be able to do. I'll have my laptop and I'll be up in Manhattan taking pictures of a new Guess store on 5th Avenue. So anyway, you guys take care, and hopefully there'll be a video tomorrow, and for sure we'll take care of it later in the week.